It's a pleasure to be a part of this event, and I'd like to thank Moneycontrol for inviting me to this third mutual fund summit. Frankly, I didn't have much idea about what Moneycontrol does in the space of mutual funds, but ever since Kaizad reached out to me a couple of months back, I have learned about the contribution this platform is making in the space of mutual funds. So let me start with a rear view, if I can say, on a rather trite note. The Indian securities market have come a long way, and looking back, when I joined SEBI, this was about 30 years back. Our market cap at that point of time, it was only BSE listed companies. It was INR 3.4 trillion, and today it is INR 458 trillion. Sensex was a mere 3,700 odd at the end of March 2014, and today it is over 80,000. At the end of March 1993, there were 9 mutual funds, including UTI, with an AUM of INR 470 billion, and today there are 45 mutual funds with an AUM of INR 65 trillion plus. So we have indeed come a long way. SEBI's mandate, when I started working, was the same as it is today. Three verbs, three very impactful, powerful verbs: develop, regulate, and protect. And all of you are familiar with this, so I don't need to elaborate that. But going back again, I'm tempted to look back, 1990s, when SEBI was focused a lot on first generation fundamental transformational reforms in the markets. And mutual fund, even then, was a very critical piece. The underlying objective was that mutual funds can be an important vehicle for spreading the equity culture in our country beyond Mumbai. See, the markets have been conventionally concentrated more in the western part of the country and mainly Mumbai. So how do you take the equity culture across the breadth and length of our big country? So mutual funds was clearly recognized as a very important vehicle at that point of time. 3 decades later, as I stand before you today, as part of my professional journey, it is very gratifying, even personally, professionally, organizationally, to see that objective of using mutual funds as a vehicle for spreading the equity cult in the country fructifying. Both industry and regulators have worked together for decades for this moment. So mutual funds are now, as we all know, an integral part of the investment landscape and have a key role in channelizing more savings into investments through securities markets. So against this backdrop, Kaizad gave me the liberty. He said, you can speak as much as you want, but I'll not bore you for a long time. I'll try to be brief. So I will divide my remarks in 3 parts. One part I'm sure most of you are very familiar with, the key trends, and I would highlight more opportunities, the way we see it. What are the opportunities in the landscape? That is part 1. And second piece, which I would like to talk in some detail, some issues and challenges which we see are very relevant for an orderly and a responsible growth of the industry. See, regulators are known to raise red flags, spoil party. That's not my intention, but it is my duty, while we are celebrating the success of our mutual fund industry, we should be mindful of the issues and challenges that we face. And I would like to spend more time on that. And I'll wind up with very briefly, some recent initiatives that we are taking for further market development. So let me come to the first strand straight away in terms of the key trends and what are the opportunities. Again, a lot of it is no news for you, you all know it, but just to set the context, AUM of the industry has increased to an unprecedented high of INR 65 trillion as on July 31, 2024, at a CAGR of over 21% in the past 5 years. If you look at the geographical mix, the share of AUM from B30 cities, beyond 30 cities, as a percentage of total AUM, it has increased from 15% to 18% in the past 5 years. We are witnessing greater individual participation between March 2020 and June 2024. The number of unique investors in mutual funds has increased from 2.9 crores to 4.7 crores. Again, an impressive CAGR of almost 12%. And SIP, this has become part of our vocabulary. And I remember until 5-7 years ago, we had to explain what SIP is and what it does and so on. So such a huge transition, SIP needs no, it's so compelling actually. It needs no description as to what it is and what it is doing to our markets. In the month of July 2024, SIP contribution was over INR 233 billion, 23,000 odd crores. Again, an increase of over 2.8 times in the past 5 years. So this could be interpreted as a reflection on, some sort of a beginning of a shift in country's investment culture, if I can say, from recurring deposits to a more effective wealth creation tool. Let me talk about the opportunities, two opportunities, the way we see it. One is that while we've come a long way, and let me also note what are the main reasons which have contributed to this fantastic growth. Increase in digital penetration, ease of onboarding, ease of investing, greater investor awareness. These are some of the main factors that have facilitated the fantastic growth. However, there is still a good runway in the coming years and ample scope for increase in penetration. So further penetration is one opportunity which we all need to take note of. And there are certain data points which support that. While the industry is expanding its reach beyond the major cities, over 52% of the industry AUM still comes from the top 5 cities alone: Mumbai, Delhi, Bengaluru, Pune and Kolkata. The number of unique investors in mutual funds is a fraction of the roughly 55 crore PAN card holders those who have linked their PAN card to Aadhaar. So these numbers are reflective of the immense opportunity for mutual funds to further tap into savings across the demographics and regions. Efficient and effective use of the amount set aside from the schemes for investor awareness and education initiatives can help mutual funds in this direction, in this endeavor. The next opportunity which mutual funds AMCs have is the stewardship opportunity. If you look at the impact of the mutual fund growth story on our ownership of Indian listed companies. So you see a very interesting trend there also. The ownership landscape is changing. In the past decade, the shareholding of mutual funds in listed companies has seen a remarkable increase of over 2.5 times, from 3.37% at the end of March 2014 to 8.95% at the end of March 2024. As a whole, the ownership of domestic institutional investors has increased to almost 15% in 2024 from around 10% a decade ago. And correspondingly, and very interesting, the share ownership in listed companies by FPIs is showing a declining trend. So DIIs are playing a strong counterbalancing role as against FPIs. Now, This rising ownership trend places mutual funds in a position to play an active role in ensuring better corporate governance of listed companies. Voting data for Nifty 500 companies shows that the highest dissent by institutional investors were related to ESOPs, slump sales, sale of substantial undertakings, related party transactions, director appointment, and remunerations. This reflects that a number of institutional investors now focus on compensation, capital allocation, and transparency, which is a good sign. SEBI has also been actively encouraging mutual funds to discharge their stewardship responsibilities, and we are willing to explore how to make this stewardship role of mutual funds more effective. We already have a code for stewardship. We have 6 principles, but can we make it better? Going forward, I believe mutual funds, through their voice and through their voting and through their engagement, they can play a significant role in driving better corporate governance practices. And see, we need good governance, good corporate governance in all spheres in our market. Now let me come to the second part of my address, and as I said, I'll like to spend a little more time on that because those are the issues which are not so much talked about while we celebrate the success story. So first is, let me straight away, elephant in the room sort of, governance of AMCs. So in order to sustain, that's my personal view, the current growth story, it is essential for the mutual fund industry to uphold strong governance practices and maintain a reputation for integrity and reliability. Good governance assumes greater significance given the significant retail participation in mutual funds. Retail investors comprise over 52% of AUM of equity-oriented schemes and over 28% of industry AUM. And mind you, many of these new investors, many of these retail investors, the numbers which I spelled out, many of them are the first-time investors. So it's very important to maintain their trust in the markets, their trust in the investments that they are doing. And you know, I've spent 3 decades and I've seen once the trust of the investors is lost, it is very difficult to get back the same investors in the market. We just slide by a good number of years. So SEBI has also taken several policy measures for strengthening governance and oversight of mutual funds, including mandating the constitution of audit committee of AMCs. We've also mandated the constitution of a unit holder protection committee. It directly resonates with our investor protection objective by the board of AMCs with a focus on unit holders protection, including adoption of healthy practices in terms of sales, advertisement, investor awareness, etc. The second piece in the issues and challenges, the self-regulation by industry. Again, a very important aspect. So we believe self-regulation is an important, and it is connected with the first point. It is a very important component of good governance. The AMC board and trustees are relatively closer to the affairs of the AMC than we as a regulator are. Therefore, they are better positioned to identify and address instances of malpractice or misconduct swiftly and more effectively. In this context, considering some front-running instances in the past, we have recently mandated AMCs to implement a structured institutional mechanism. I'll explain what it is. It's like 3 big words, which can proactively identify. This mechanism's objective is that this mechanism should help the AMCs to proactively identify and deter instances of potential market abuse, including front-running and fraudulent transactions in securities. This mechanism shall consist of enhanced surveillance systems, internal control procedures, escalation processes, and a whistleblower policy. The standards for implementation of such an institutional mechanism have been collaboratively developed by AMCs and MFI in consultation with SEBI. In fact, only yesterday, MFI has issued the standards on structured institutional mechanism. So the idea is this mechanism will help us have a consistent, uniform practices across AMCs in terms of their internal monitoring. So let's see how it plays out going forward. This is a very recent step that we've taken. Let me also very briefly flag some important observations which are made by SEBI during our inspections or during our supervision of AMCs, and I just picked some important ones. There are numerous things that we come across, but I thought it may be a good idea to share some important areas for AMCs to take note of. So first is ensuring, this is sort of not a laundry list, but a list of 5-6 points. So I'll just take you through that. Ensuring segregation of activities of mutual funds with that of portfolio management and other advisory services. So we've come across instances where it was not done, and that's not appropriate. Implementation of dealing room related requirements and dealing room related access controls. Having a robust stress testing policy. Following ethical practices when it comes to selling of mutual fund schemes, such that malpractices such as indirect passbacks, payout to distributors or investors, payment of access commission through vouchers or gift cards do not take place. Ensuring compliance with guidelines for trading in securities by employees of the AMCs. Let me also mention in this context that with effect from November 1 this year, 2024, units of mutual fund schemes shall be under the ambit of SEBI insider trading regulations. Proper maintenance of record to show due diligence and trail for investment decisions. It's very important to have these kind of trails because sometimes, God forbid, if the investment becomes controversial, you have some trail, some evidence of due diligence done. Let me move to the next point under the same head, issues and challenges. Let me talk a little bit about monitoring and supervision by SEBI. Again, I picked up this because this is again not much talked about. We have a very comprehensive strategy now and toolkit for undertaking monitoring and supervision of mutual funds. Our conventional way has been to visit AMC's office once in a year, pick up the AMC based on a risk-based criteria, and then do inspection. That has been our way of doing it for a number of years, but few things which are of more recent development. And we also conduct thematic inspections. We pick up a theme and run it across various AMCs. So in recent years, we have been increasingly deploying technology in our supervisory process to automate compliance checks. The broader intent is to enhance a culture of continuous compliance. Technology has enabled us to monitor thousands of data points, which are impossible to monitor manually. We've developed an algorithm-based alert monitoring system that is used to check regulatory compliance. As on date, over 100 algos are used to monitor various regulatory requirements. Additionally, we also have alerts to detect potential malpractices such as mis-selling, churning, continuous rollover of short-term deposits, etc. So this technology-driven supervision is helping us in many ways. First and foremost, it has substantially increased our supervisory bandwidth and brought greater focus on supervision. It is helping us to reduce the potential blind spots, the potential risks which may be building up in the system and which need to be detected early, it is helping us to reduce the time between the occurrence of an event and detection. If you detect an event too late, there's a lot of potential for greater harm. But if you detect in time, you can minimize the harm, you can minimize the damage. In addition to supervision, the data that we collect as a part of our supervisory endeavor, we also use that data extensively while undertaking policy measures. We backtest our policies on the data that we gather. Just two more points on the issues. And I think this is also very important. I was debating whether I should say this first or the other things which I already spoke. So as the industry is growing, and this is about the infrastructure, the sufficient and robust infrastructure. We need to ensure, as an industry, as a regulator, that the infrastructure and ecosystem is robust enough to handle greater volume of transactions. Maintaining sufficient capacity and scaling it up in tune with the growth that we are witnessing is obviously very critical. We recently had a situation, many of you would know, where there was a substantial surge in transactions in mutual fund units, especially subscriptions. I think there was a fall in the market on a particular day and people wanted to get the benefit of a lower NAV on that particular day, and there was a rush for subscriptions. But some of the AMCs were unable to allot the same day's NAV to investors. So in the context of, so the point I made earlier, it's very important to have the appropriate capacity which has to be very proactively monitored while the growth is happening. Are your systems good enough to handle the growth that you are witnessing? So in the context of robust infrastructure, having a sound framework for management of operational risk is critical. Maintaining sufficient disaster recovery and business continuity, cybersecurity, data privacy, these are some other issues which need to be kept in the forefront. These are the areas where there is a need for greater focus and oversight by the AMC board, supported through technology committee. The last point, and very important again, and this has been talked about earlier as well. So while we are witnessing a lot of money coming into the mutual fund space, we need more listings, we need more asset class, we need more fundraising by existing listed companies from the market so that the money which is coming in can be appropriately invested in various avenues. So the fresh paper issuance is clearly a better reflection of fresh capital formation and raises less doubts about asset price inflation. So this is another very important piece. Let me come to the third part in terms of the recent policy initiatives, and I'll be very brief there because these are some of the initiatives which are still work in progress. So I'll just very briefly mention about them. We've issued a consultation paper. The comment period is over on the introduction of a new asset class that seeks to provide investors with a regulated, it would be high risk, if I can say, or maybe it's relatively more risky product, featuring higher risk-taking capabilities and a higher ticket size. The new asset class is aimed at bridging the gap between mutual funds and portfolio management services and curbing and another important objective here is curbing the proliferation of unregistered and unauthorized investment products. Because otherwise there is a temptation for people to get into the unregulated space. So that was another driver for coming up with this idea. We've recently concluded consultation on introduction of MF Light regulations for passive funds. The proposed low-ticket SIP is another exciting prospect for furthering financial inclusion and also the growth of the industry. And lastly, we've also concluded consultation on allowing greater flexibility in participation by mutual funds in credit default swaps, CDS. Let me conclude. I firmly believe that as far as development and regulation of mutual funds industry in India is concerned, the industry has openly embraced change, and we have a powerful narrative to share with the world. However, we do have a long way to go. There is no room for complacency. Maintaining public trust and confidence in the integrity of the mutual fund industry through good governance, which I outlined earlier, right conduct, transparency, and innovation will be key to future growth of the industry. And I firmly believe as long as we remain focused on these aspects, I'm sure that the mutual fund industry of the future will be a beacon for the rest of the securities markets and asset management industry, not just in India, but globally. Thank you very much for your attention.